Hola, hola, buenas tardes. Welcome to El Teatro Santana, to la Biblioteca Pública. My name is Marie Moebius. For those who don't know me, I'm the director of la Biblioteca Pública, very lucky director. Thank you so much for being here today. Welcome to la Biblioteca Pública, to this informative event under the title of Charitable Giving, Discover New Tax Benefits for Your Donations. This panel will inform you on several straightforward donation strategies that may help reduce your tax liability. This event is organized by La Biblioteca's fundraising committee, chaired by Deborah Broussard and Jennifer Posner. Deborah and Jennifer are both long-time residents in San Miguel de Allende, and they both previously served on the board of directors of La Biblioteca as president and secretary. La Biblioteca is so lucky to count on their strong commitment to our organization. Thank you so much. Thank you to both of you. Deborah and Jennifer very carefully prepared and curated the content of this panel, and I hope you will enjoy it. I'd like to share with you that this panel is recorded, so we will have an opportunity to share that information with you over an email so that you can watch again all that very important information. Deborah and Jennifer, I leave you the microphone so that you can introduce us to our wonderful panelists. Thank you so much for being here today.
Thank you, Marie. Well, good afternoon, everybody. Just starting to think we're just about Day of the Dead, and so everybody's starting to focus on year end. Starting to think about those holiday travel plans, buying tickets, planning meals, figuring out what you're going to do, all kind of good things to start thinking about before the end of the year. But one other thing that's maybe not so fun to put on your list is to think a little bit about tax planning between now and the end of the year. And while Jennifer and I cannot help you with your holiday menus or any of those things, we thought we could help you a little bit by sharing some of the information we've learned about ways to give that generate tax benefits as well. So I guess, you know, you've saved and you've invested all your lives to be able to hopefully retire, a lot of us here in San Miguel. And we talk a lot about with our financial people or with friends, oh, I've invested in this, I'm doing this, and this will, you know, get me to retirement. One of the things we never really talk about amongst each other is tax strategies. And tax strategies are really meaningful. And so what we hope is that we can share some of that with you today. Now, our focus is on U.S. donors and U.S. tax strategies today. So I want to let you know about that. But we've assembled a panel to visit with us today. And I think you're going to enjoy hearing from each of these different folks. We have a very knowledgeable panel. And first I want to introduce in the middle here, Joe Godshaw and Christy Poole, who are from Louisiana, and they are both financial advisors and specializing in investment and insurance needs in the U.S. Now, I will warn you, Joe, with that last name, Godshaw, he is a pure D Cajun. And when he speaks fast with an accent. So we may slow him down a little bit, but you know, it's good for everybody to know. But Christy translates for Joe. So that's what we've got going on there. And then I'd like to introduce here, just the other side of Jennifer, Paul Carlino, and he is a U.S. tax preparer based in San Miguel. He and his family have been here for about 7 years, and he does the thing, or his background is what my father told me as a young woman going out into the world when I was starting to do my own taxes. He goes, you always want a tax preparer who has worked at the IRS. And Paul has worked at the IRS. And last but certainly not least, I want to introduce Enrique Ramirez at the far end. Enrique is San Miguelense. He is a lawyer here. He specializes in contracts, but particularly in last wills and testaments, living wills, advanced medical directives, powers of attorney, and other contracts that you may want to consider if you're living in San Miguel. And so with that, Jennifer, I'm going to let you get us kicked off.
Okay, so I'll just reiterate that what Deborah said. Our focus today is on U.S. tax strategies. So we will focus primarily on that. We will save questions and answers for the end. And as you can imagine, we're all in different situations. So we're going to just try and keep this as generic as possible so that we can kind of give you the overall perspective. We obviously have a favorite charity here, being the Biblioteca, but all of this information that is going to be provided is valid for any 501c3 or charity in Mexico, and our panelists can specify with their answers to that on how it pertains. But so it's not, we would love if you give to the Biblioteca, but again, this information is valid for any non-profitable non-for-profit charity.
And what we'll hear about is it's really, for these tax benefits, it's related to those charities that are registered 501c3s.
Yes.
So that's where we're going there.
So Deborah and I talk over each other and complete each other's sentences all the time. So we've worked together for a number of years, but we're your moderators today. And we are going to point questions that hopefully may be on your minds to our panelists so that we can kind of kick this off and get the juices flowing with everybody's mindset here. First, I would like to ask, and again, Joe and Christy work together, so we're kind of treating Joe and Christy as a tag team, and you guys can answer, either one of you can answer questions or interject as we go along. But Joe and Christy, I would like to ask you guys, what motivates your clients to give to charities in the States? And what is the typical profile that if you had a profile, if you could specify, of your clients that give charitable gifts?
So let's see if y'all can understand me when I speak. So basically, clients give because it's emotional or financial. You know, I sit on some foundations, and that's what they do. You know, the type, or like an example, it's everyone's different. You know, you have people that give large sums, and you have people. I think one of the biggest things we have in charitable giving is people think they don't have enough to give. You know, they think like, I'm not wealthy. You know, I can't give $1 million. Like I said earlier, you know, I'm not Bill Gates or, you know, Melinda Gates, you know, giving billions of dollars, but every dollar counts. And that's what we try to do. And like I said, we have clients that are worth millions and clients that give to charities $100 a month. You know, people are more afraid of making a mistake. It's like they think, I don't know,
I would agree. I would say that I believe a lot of it is that the barrier is not knowing how to begin giving. But we do have people on modest incomes who are living on a mixture of Social Security and possibly required minimum distributions from their IRAs. And, you know, by giving that small amount, they're able to give through the year. With us being in Louisiana, and it may be something like here in San Miguel, you know, in Louisiana, the church is probably the biggest benefactor that drives people, is the moral and the religious. But then there's also the arts. So we've got, you know, in different areas with Louisiana and culture, there's that as well. So we've dealt with everyone from on the lower end on up to, you know, more complex donor advised funds or trusts, but there is definitely something for every level.
Great, thanks. Paul, we kind of touched on this about the whether you have to be wealthy to get to benefit from the tax benefits that we're going to talk about today, or could any average person really benefit from different tax
Yep.
strategies?
Yeah,
Sorry.
thanks, Jennifer. Yeah, so anyone who files a U.S. income tax return can obtain a tax benefit from charitable giving, either currently on their Form 1040, which they file annually, or in a longer term estate plan. Couple of points though for the 1040 aspect in particular is that charitable giving, a charitable donation, is an itemized deduction against income, and there's a tension between whether you're going to itemize your deductions on your 1040 return or you're going to take the standard deduction. I get a lot of clients who have given a couple of $100s to different charities, and when I show them their tax return, their draft of their return, they're like, well, where are my charitable deductions on here? And so your standard deduction as a single filer is $15,000, and your deduction as a married filing jointly is up around $30,000. So in many instances, if your itemized deductions, of which charitable deductions are one, medical expenses are another, certain state and local taxes, if that bundle of itemized deductions doesn't exceed your standard deduction, then it might not benefit you on that particular tax return to itemize your deductions. Rather, you would take the standard deductions. Now, there's a couple of key exceptions to that generalization that I think we'll get into later, but that's kind of the general rule.
Thanks, Paul. Enrique, I would like to ask you just, do you find that many foreigners living here in Mexico actually create a last will and testament for their Mexican assets? And if they've done that, have you run across many wills that allocate charities as beneficiaries in their wills?
Good afternoon. Thank you for the question. Yes, in my experience, most of the foreign people living in Mexico create a Mexican will in order to dispose about their assets located in Mexico. In Mexico, we normally use two kinds of wills. What we call a simplified will. The simplified will is you can execute that one at the time that you buy a property and you sign the deed before a notary public. At that moment, you can dispose of you can create a will that will dispose of that property. And what we call, or what I will call at this point, a regular will. The regular will you can execute at any time. And you can, with this regular will, you are going to be able to dispose about all your personal and real estate property. So in any of these two wills, you will be able to appoint a charity, for instance, if you want, as the heir or the beneficiary. It is important that you know and understand that the wills you must to grant them personally. It cannot be granted through an attorney, in fact. But also the wills in Mexico, you can change, modify, or revoke as many times as you want during this time. And in order to respond about the question if they appoint the charities in their wills, I have almost 20 years of experience. During all this time, I have been advising foreign clients to create Mexican wills, powers of attorney, and all these agreements. And basically, I know, and I'm very clear that most of the foreign people include charity in their wills, either as a universal heir or with a legacy for a specific asset.
Very good, thanks.
Thanks. That's very interesting, Enrique. So now why don't we get to kind of a little bit of the nitty gritty, and maybe we start a little bit, Paul, with the example that you had with us before, where people are giving cash. That's the easiest, straightforward thing during somebody's life, and they got a little extra money this year, and so they're going to donate it to a charity. What are the things that they need if they're going to? Let's assume that they're going to make a donation that's in excess of the $15,000 standard deduction that you talked about. What are the things that they need to do to make sure that that gift is in fact deductible, that they're able to claim it?
Well, the number one thing would be to make sure that it's to a qualified 501c3 organization. 501c3 orgs, everyone's probably heard that term, or charitable organization. These are groups that 501c3, by the way, is the Internal Revenue Code section that lists all the things that the organization needs to be approved by the IRS as a charitable organization, or an organization that you can give cash to and get a deduction for. So that's the number one thing, right? There's a tool on the IRS website. You go to the irs.gov and you can search for tax exempt entity search, and it'll come up with a little box, and you can either type in the EIN of the organization that you're going to donate to, or the name of the organization, and that'll show you whether that organization is indeed approved by the IRS as a 501c3. So, I mean, that's the number one thing. And then typically, an organization will provide a receipt that shows the amount of the contribution.
Paul, what is an EIN?
An EIN is an employer identification number. It's like an SSN, or it's like a social security number for a corporation, or for a organized entity.
Okay, so we've got cash. We figured out what to do with that. Now let's talk about in-kind items.
Let me say a couple of more things about cash, though,
Okay.
because one of the other things that my clients will often give me is a list of the GoFundMe donations that they've made, right? And a GoFundMe generally is, it can be to a charitable organization, and I understand that there's a tool on the GoFundMe page or similar pages where you can identify whether it's a 501c3. But just giving someone money to help them purchase some medical equipment, or to help them get a surgery, or these kinds of things, that's not a deductible. It's not deductible for tax purposes. The IRS considers that a gift, a person-to-person gift, which is very generous, but unfortunately, it's not going to give you a tax benefit. Might give you, benefit with the big fella. So that's one thing. The other thing is cash donations made directly to a foreign organization are not deductible for U.S. tax purposes. It has to be to a group that's approved under these 501c3 rules by the IRS.
Great. Okay, so let's take it the next level, and let's talk about other ways that people can support charitable organizations. And that is also with in-kind donations. So let's do the example, my name's Fred. I've been living in San Miguel for 20 years. I drove my old truck across the border 20 years ago when I came down. The thing's fallen apart, but I don't really want to deal with selling it. And so I thought can I give it away, and can I get a tax deduction for that?
Yes, Fred, thank you. Gifting assets, like a falling apart truck, or even a nice truck, rather than selling them and gifting the cash proceeds, you can definitely get a deduction for that. Based on its fair market value. Well, what's the fair market value of that truck? Well, let me tell you a little story. So my dad, who I will call a deduction opportunist, We're driving in North Jersey one day, and there's a bookcase on the curb. Clearly, someone's throwing it away. It was a pretty nice bookcase, right? So we stop, throw it in the back of the truck, and we immediately drive to the Salvation Army and donate it to the Salvation Army. You know, they give you that little receipt of paper that's blank. It's got the date on it, and my dad fills it in. Bookcase, $250. At this point, I'm working for the IRS, so I kind of look at him and like roll my eyes a little bit. And he's like, "What? It was nice." So, you know, that's the fair market value of that bookcase. And we've all done it, right? We've given clothes, we've given books, we've given furniture to organizations like the Salvation Army or Patronatos por Niños. Sorry, I always get that one wrong. But, and, you know, if what's you know, that table worth, right? Like, we can make up a price, and the IRS is probably not going to argue that that's worth $10 instead of $15, right? But a vehicle, a piece of art, a house, you know, these bigger ticket items that are have real, you know, impact, you know, and real value, you're going to want to get a professional appraisal for those things. And there's an IRS publication, it's number 561, that has a list of, or not a list, but information about how to, what valuation requirements need to be satisfied for different items like what we're talking about, a vehicle or something bigger ticket.
Jennifer, you had some questions.
Yes. So on the tone of in-kind donations, there are other non-cash type of donations that we can make that I'm personally just getting educated on recently. So I thought this would be helpful to share with you guys to see if it fits in any of your criterias. So say, Paul, again, sorry, we're gonna load you up here on questions, but let's talk about securities. Say I bought Apple stock that was purchased back in '95, and you know, I bought it for a whopping $25 a share, perhaps at that time. But now it's not worth $25 a share, it's worth $200 a share. And I don't want to cash it out because it's going to create a significant capital gain for me, and consequently a huge tax burden. So would it be possible for me to donate some organization?
Again, yes, absolutely. And it provides tax benefits really across the board to you and to the organization. So let's walk it back a little bit. Let's say you did sell the stock. You wanted to donate to the Biblioteca. You sold that stock. I'm going to use my numbers, okay, instead of your numbers because I don't remember your numbers. But let's say you paid $2,000 for that stock and you sold it for $5,000. That's a $3,000 profit that you're going to pay capital gains tax on. Assume the tax rate is 15% on that. So that's about $450 in tax, which now you have $4,550 to give to the Biblioteca instead of $5,000. Generous donation, right? But you can do better by gifting the stock itself, right? So now the Biblioteca is getting the full value of the fair market value, which you don't need a professional appraisal for that, right? Because there's a market for that, of $5,000, and they can sell it and realize that $5,000 without any tax as a nonprofit, and they're getting a stepped up basis, but we don't need to go there. But they're paying zero tax on a $5,000 gift, and the tax benefits for you are twofold. First of all, you're not paying any tax because you didn't sell the stock, and second, you're now getting a $5,000 charitable deduction as opposed to what it was before, $4,550 if you sold the stock. So it's win-win for both.
Great. So a lot of this information, by the way, is pretty tedious and detailed. We are in the process at the Biblioteca of updating all of this information that we're sharing to you today on our website. So they're bookmarks at the entrance. Feel free to take a bookmark to kind of trigger your memory on some of these topics that we're talking about today. And then you can check out our website and get this information so that you don't have to totally remember every word that we're telling you today. Deborah?
Well, I guess we have one question for Joe. I know you deal in life insurance. What about giving life insurance to a charitable organization? Can that be done, and how would you do it?
Yes, that can be done, and that's usually one of the easiest things to do. You can do it several ways. You can assign them as part of the beneficiary of your policy. That's one way of doing it. That's the easier way. Or you can give them the policy outright. And what we find is people, life insurance is easy to give because I'm not giving it away, if that makes sense, because I'm gone, you know. So people have a hard time parting with their assets now. But you can do it several ways. You can give it in the ownership, and the charity can take it over and they can sell it, they can cash it in. There's multiple things you can do with it, but it is one of the, we find the easiest things, because again, I like to say selfish, because like our hardest thing is when people think I'm giving my assets that I can touch away right now, because they'll never see the life insurance as their family. And like I said, you can give it all, you can give them a portion of it, and it's really not, it's the easiest thing to do when you're giving is the life insurance. It's the easiest.
And you can make a big impact too, because if you think about premiums that you've paid versus the value of that insurance, you know, it's amplified what you're giving away. So as Joe said, you haven't touched it like your hard-earned assets that are sitting in your bank account. You've yet to see that money. You've just been paying premiums on it. So that is, I would say, probably one of the easiest ways to give.
It is, and I sit on a nonprofit, and I help them design some, you know, the wording and everything, and that's where most people give, is the life insurance. It is. It's just because it is. That's where it's easy, and it's not all. It's hard to get them to part ways with hard assets. They do it, but again, life insurance is really an easy way to give.
Well, so Enrique, I have another example for you, and thank you, Joe and Christy, for that answer.
I'm sorry, can I just cut you off before we do a segue here? Life insurance has two flavors that I know of. There's term life and there's whole life. So what if I have been paying into my premiums, which you touched on, Christy, all these years, and I get to the point where I say, you know what, I don't really think I need to keep paying my premiums on life insurance, so I'm just going to cancel my policy.
So that is a whole nother level. So when we see the charities will take the life insurance and they can sell them. You know, there are companies that buy it, buy life policies. The charity can keep it. Most of the times, Jennifer said there's about 100 different types of life insurance. It's just funny. There's multiple levels of term, but term is easy, it's cheap. A lot of times, the charity, if you give it to them, they'll continue to pay the premiums. But the whole life, which is a much more expensive policy with cash in it, if you donate it to them, then they'll typically surrender it for the cash. Is that an answer? You know, yeah. And it's just, yeah. And then again, if you're sickly, and we see this a lot. People will come in and want to get rid of a policy, and they've been paying on it forever, and I'll say, let's sell it. You know, they're just gonna, and even term insurance, you know, and they'll get money and they'll donate it, you know. And the main thing, the charity doesn't want to be stuck paying premium, you know.
If you're young and healthy,
Right.
It's probably a lot different than if you're retired or aged, and they can look at it as as a finite, somewhat of a finite time.
So there is a resale market for insurance as well.
There is a resale market for insurance, and I know y'all said not to go too deep. And there's some people have an ethical, moral thing with it, because technically with life insurance, you're only supposed to. I have to have an insurable interest with you, whether you're my spouse or in business, and that has been like toeing the line lately, because a lot of people, it's about to split. That you sell the policy. How can someone that has no interest in me? It's a little ethical dilemma. You see that a lot, but there is a big market for it. It's a big, big market, and yes.
Okay. And without going, also just to think about, and maybe you can, I don't know if you want to touch on tax on this, but depending on how the insurance is set up, sometimes if it's not, the will and everything hasn't been set up correctly, or the beneficiaries, sometimes that insurance policy, if you passed away, could become part of your estate. So if you are donating it to the charity, you are therefore taking it out of your estate. So then there's a tax benefit there.
Okay. Well, while we're still talking about different in-kind types of things that we can give during our lifetimes, and Enrique, this time my name is Mabel, and I'm 99 years old, and I've lived in San Miguel since I purchased a home here 40 years ago. And my family and I have finally agreed that I'm going to have to relocate back to the U.S. And I'll be living with relatives in the U.S., and I have a nice pension. And so I really don't need the income from the sale of the house to be able to live off of it. And it seems like such a hassle to sell the house. Could I donate the house to a charity here in San Miguel instead of selling it?
That's a very good question. And the response is yes. Of course, you can donate your property to a charity here in San Miguel, or to any other charity. Actually, we have taken care of many donations like this from even foreign people that are currently living in San Miguel, but that they want to donate one of their properties to a charity. And for instance, the last one that we took care of that donation, it happened 6 months ago, where a foreign people that wants to return to the United States decides to donate her property to a local charity here in San Miguel. And you know what? This is a really great experience for us, because the people that donate the property, they feel really comfortable because they know that they are helping a lot of people in need here in San Miguel in this case. And for the charity, it represents, a real advantage, because they are receiving a property that they can rent, or in the future they can sell in order to bring more money for the charity and use for their purpose. So yes, it is completely possible, and we have took care of many of these donations.
I'm sorry. Can you donate to multiple charities, a house to, or you have to allocate to just one?
No, you can donate to multiple charities, and you can even establish the percentage that they are going to be co-owners in that property.
And are there tax advantages to doing that? If I'm, if I give a piece of real estate away to a charity during my lifetime, and I guess the question is whether there would be tax advantages in Mexico or the U.S. But getting back, in this particular example I gave, let's assume that the property has appreciated and it's worth a lot more money than it was when I purchased it 40 years ago. In Mexico, if that property is given to a charity, who pays the gain on the appreciation of the property?
Okay, in this case, the charity will need to pay a capital gain tax. The advantage that we have in this case, and I think that this is very important, is that that capital gain tax is going to be not really on the gain, but it's going to be 20% of the tax property value of your house in this case. When I mention tax property value, if you own a property, you have seen on your tax property payment that your house reflects a price. that is much more lower than the commercial price. So the 20% that the charity will pay will be based on that tax property value, which let's say could be probably, let's say, 2 million pesos, but the real or the commercial value for that property could be, I don't know, 10 million pesos. So it is a real advantage in that regard because the charity will just pay based on that tax property value, which, as I already mentioned several times, is considerably lower.
Great. Now, Paul, I have a question here that makes me think of spinning off of this. Let's take the scenario a little bit differently. Let's say when I was in my 20s, I bought a piece of rental property in the U.S., and I've held on to this rental property all these years, and I'd like at this point to donate it to the Biblioteca. I'm presuming that people could donate a piece of real estate to a 501c3 from the U.S. as well. Huh?
Yes, for sure. There's special rules for the taxation of houses, homes, real estate that are a little complicated, right? You mentioned it was a rental, so that means that the Mabel, 20-year-old Mabel, wasn't living in it as her primary residence, right? So if you are living in a home as your primary residence, either in the U.S. or here in Mexico, then the tax code, the U.S. tax code, gives you something that's kind of commonly referred to as a homestead exemption. It's an exclusion from your gain on the sale. But as a rental property, that doesn't apply because you're not living in it as your primary home. So if you were to sell the house, sell the property, you'd be realizing a capital gain of some percentage on the difference between what you paid for it and what you sold it for. However, if you donated it, again, we're going back to what's the fair market value of that piece of property that you donated. You're not making a sale, so you're not realizing any gain, so you're not paying a tax on that you would be paying. The charity, the Biblioteca in this case, is getting the benefit of that property at its fair market value. So if they then sell it at that fair market value, there's probably very little income tax consequence to Biblioteca. So it's a good strategy to get to eliminate a lot of tax and to make a nice donation.
Okay. Well, thank you, Paul. I want to talk a little bit now about charitable donations and IRAs. And so I'm going to give you guys from Louisiana another scenario. Okay, in this one, my name is Boudreaux. And I've been carefully planning my retirement since I started working 35 years ago. And I did what all my buddies and advisors told me to do. I set up all these IRAs. And I'm getting to be 70 now, pushing that. And I understand there's something called this required minimum distribution, where the government's going to force me to take money out of my IRA, and then they're going to tax me on the money that I put in the IRA. That just doesn't seem right to me. What can I do about that? What can Boudreaux do?
So a great thing that they have is a qualified charitable donation. So you can make a donation to a charity and satisfy this required minimum distribution at the same time. So most of you, I'm not sure if you're familiar, but the required minimum distribution is, the government's way of saying we don't want you to outlive your money, which really is you put this money in here tax deferred, and we want to make sure we collect taxes on it before you pass away. So they're going to get the money or the taxes regardless. So if you're in a situation where maybe you do have multiple IRAs, and let me qualify this. The only Roth IRAs, if you're familiar with those are funded with after-tax dollars. There's no RMD requirement on those. So it does not apply to what you take out of a Roth, but a traditional IRA or an employer-sponsored plan, so your 401k, they fall under the same rules. When you're 73 and a half, you've got to start taking that money. But qualified charitable distributions, those actually begin at 70 and a half. So once you're 70 and a half or older, if you start taking those required minimum distributions, and it doesn't have to be the entire amount, but you have a charity that you would like to fund, you're able to take that. It does not count toward your adjusted gross income. It does not count as regular income. Whereas if you just take it as a regular RMD, when it's time to file taxes, you're going to have to pay taxes on that. So it helps reduce your tax burden, and at the same time, you're able to donate to the charity.
And Paul, I take it that those are those requirements, the 70 and a half and the 73 and a half, that can change.
Don't you love that? When did the half ever,
I know.
like when you were
I know.
5.5, 6.5, right? Yeah. So 70 and a half, 59 and a half. Yeah. There's a bunch of half, I don't know, the IRS, but, yeah, well, right. So for RMDs, begin at 73, for the next couple of years. And then I think in 2033, it changes to 75. So in the year that you turn these particular ages, you need to start taking your RMDs. And yeah, that's subject to change.
And I will say the limit is 108,000 for the QCD. Yeah, for the qualified charitable. So it is limited to that.
Well, Jennifer, you have some questions about donor-advised funds, and that's one of the things that the Biblioteca has benefited from this year, as we've started receiving, a couple of folks have started making donations to us from these donor-advised funds. Jennifer, you want to get into that?
Yeah, so I just, this is a new vernacular for me, but here's the scenario. I'll play on with Deborah's scenarios. My name is Bill, and I had a incredible windfall this year. And I was able to sell some stock, and that is going to generate a huge capital gain for me. And my financial advisor said, you might want to consider a donor advised fund to be able to offset some of the taxes that you're going to be getting or being hit with this gain that you're getting. So it's twofold here. So I'm going to throw it at Paul first to talk about, just to educate us on donor advised funds and what tax benefits would that provide for us.
Sure. Well, the first thing I'd say is maybe you want to talk to your financial planner and ask him or her, why did you make me sell this stock first, and then donate the cash to the DAF, because you could have donated that stock to the DAF and the all the things that we talked about before, right? There'd be no capital gain tax. You'd still get the benefit of that large capital gain profit as a deduction, as a charitable deduction. So yeah, so essentially,
So windfalls come in many ways. So
Yeah.
maybe I hit the lottery.
maybe you wanted to provide a windfall to the IRS too. But yeah, a DAF, donor advised fund, is, and this would apply with like other assets as well, right? Like we talked about donating the assets directly to the charity. Well, maybe some charities aren't really equipped to know what to do with appreciated stock or some of these other types of assets that we have. So you could donate those to a donor advised fund, which would allow you, everything that you donate to a DAF in a particular year qualifies as a charitable contribution, because these things are set up to, basically it's like an investment fund that you can then direct charitable contributions to be made from your DAF.
Okay, so I'm going to let you guys answer. How do you set up one of these?
I'll
things?
jump in on this because I love these. I think that they're a great new product. They're a little bit newer. So number one, they're very easy to set up. They operate a lot like a foundation would, but you don't have to have all of the reporting and the headache and the hierarchy and the paperwork. I had a client who wanted to leave funds to his church. He owned a business. He was having a great year. He also had some appreciated stock because there's so many options that you can put into a donor advised fund. And what's great about it is that you get to recognize the tax deduction in the year that you put it into the fund, but you don't have to give it to the charity that year. You can time when you're able to give the grants. So just like you would in a foundation where you can give grants out, you can time those donations, but you're able to recognize those tax benefits immediately. So it's very good and it's very flexible. You don't have to set up some kind of legacy where you're handcuffed to giving a certain amount every year. It's a lot of business owners I've seen do it. So this year I'm going to have a lot. I'll take and I'll move that into a donor advised fund. Next year, maybe my income situation is a little different and I don't need that tax write-off, so I don't do it. You can even get more complex, which we won't get into bunching and all that good stuff, but you can talk to your advisor about that. There's ways to immediately recognize some of it. And on the other side, you can give to one charity, you can give to multiple charities. The minimums, they fluctuate depending on who the custodian is, but you're not looking at hundreds of thousands of dollars. In some cases, it's maybe 10,000 or even a little bit lower to establish one. And like I said, there's no reporting requirements. So they make it very accessible to a wide range of people. And you're able to do a lot with it. And as to what you were saying, for some charities who maybe aren't as savvy and don't know what to do with it, you can put it here. I could go on and on. I'll stop.
So funds. There are a lot of funds in investment strategies. The simplest and most common is a mutual fund. So do donor advised funds work the same way, that they have income potential beyond the time that you establish one, or is it just parking that money one time?
No, they do have the potential. So I had the individual that I was talking about, he donated cash. There is, because it is a donor advised fund, there are some fiduciary standards to where, you're not going to go invest it into some crazy penny stock, right? You're going to be a good fiduciary of those funds since you are intending it for the charity. So you're able to, when we were the company that we were working with, you could either have them manage it or the advisor could pick the investments that the cash went into. But we were very prudent with that. So you can own stock, you can own mutual funds, you can own anything in that. If you're donating the money, you're going to want to be more prudent because you're going to want something that's going to go up in value and definitely not gamble that away.
So just to clarify this, so that once you establish this fund, it's in your investment portfolio or my investment portfolio, but you as a financial advisor is who manages it?
You can set it up different ways. In the situation that I was in, the client asked for us to he didn't want to pay a third party manager. We were actually custodied with Schwab, for instance. So Schwab says, hey, you pay us X number of basis points or percentage of the money and we'll invest it for you, or your advisor can invest it for you. There are some sites out there that I've seen that I think individuals can go directly to if they wanted to do it themselves. Having been in an advisory type business, we've always had it to where they've come with us to our custodian, and we've been able to manage it that way.
And I'll just point out that however you do it, the money that you invest in the DAF, in the donor advised fund, does anyone call it a DAF, or is that just me? Okay. It's growing, hopefully, and it's growing tax-free, right? You don't pay income you don't pay income tax, you don't pay capital gains tax. You put it in, you take that charitable deduction, and then it grows in there, and so you have more money to donate in the future.
Got it.
Okay, so we've been doing this for a little while now, and as we're getting towards the end of our program, it's time for us to talk about end-of-life sort of giving and issues here, legacy giving. So Enrique, let's start with some basic questions. You know, I'm a U.S. citizen, I have a U.S. will, I'm living in Mexico. Why would I need a Mexican will?
Okay. First, I would like to clarify that a U.S. will is completely valid and enforceable in Mexico. However, I think that when one of the reasons to create a will is in order to make sure that your assets are going to be distributed according to your last wishes. Considering that a U.S. will is valid and legal in Mexico, but it is also important to mention to you that it will represent to your heirs to take care of a probate process that is going to take more time. It is going to cost to them more money, and it is going to be more complicated for them. One of the reasons to create a will is to make everything easier for your heirs. So even when you have a U.S. will, if you live in Mexico, and especially if you have Mexican assets, I strongly recommend to create a Mexican will. This will can be limited to your Mexican assets, current and future personal and real estate property located in Mexico. It does not need to, revoke or modify your U.S. will. It will just dispose about Mexican assets, and in that way, you will also make for your heirs the probate process faster, cheaper, and more simple for them. So I think that's one of the main reasons why you need to create a Mexican will, even if you have a U.S. will.
And I think we've already mentioned that obviously an individual in their will, be it in Mexico or their U.S. will, they can include a charity as one of their beneficiaries in the will. Is that correct?
Yes, it is correct. In my experience, as I already mentioned to you, I have been doing this for almost 20 years, and it is completely possible to include as your heir, meaning that will receive all your assets, in this case in Mexico, to a charity or to some charities, as we discussed before. You can establish as many charities as you want as your heirs in Mexico, and you can even establish the percentage that you want that each one of them receive. So yes, it is completely valid and completely legal. You can even appoint a 501c3 in Mexico as your heir. Also, if let's say that you have a children or you have relatives that you would like to appoint as your heirs, but you can also establish a legacy in favor of one of the charities that you prefer.
Terrific. Now, Paul, we know that there are not a lot of people have to deal with estate taxes, but there are a fortunate group of people that are going to be faced with estate taxes upon their death, or their heirs will be faced with the estate taxes. Are there any benefits of specifying that appreciated realty in a will should go to it should be left to a charity versus cash to being left in a will to a charity?
Well, so the estate tax exemption for 2025 is almost $14 million, right? Mm-hmm. So if your estate is below $14 million, you don't have to worry about this. And then it goes up to 15, I think, next year, and then it indexed for inflation. So yeah, you're right. only a fortunate few, I guess, have to worry about this. But yeah, unappreciated. So when we pass, our estate springs to life, and then the estate has to deal with all of our assets and potentially distributing them, and potentially, well, first paying taxes and then potentially distributing the assets. So it would to donate to bequest or to give an appreciated asset to a charity as opposed to your living relatives, living heirs, would have the same tax impact as if you were alive, right? That asset would be part of your estate, but it wouldn't be taxable to your estate. It wouldn't be taxable to your heirs. It would be given to the charity at its fair market value, right? So in the context of appreciated Apple stock, for example, that could be a huge portion of the estate that's not taxed as part of the estate, and that's would be a big benefit to a 501c3.
Great. Now, my next question is for Joe and Enrique. Now, I know on my bank accounts, I have filled out a designation on death certificate in the U.S. so that on my death, my bank accounts go to somebody, and I assume they pass outside of my estate or outside of my will. First of all, Enrique, is there the same thing in Mexico with our bank accounts in Mexico? Are we able to complete something that says on our death, this account immediately goes to this person? It doesn't go through the will?
Yes, actually, when you open a bank account in Mexico, as part of the agreement that you sign, they're required to appoint some beneficiaries, provided, which is the almost, if not all, but almost all the cases, provided that you appoint beneficiaries in your bank account, the bank account will not go or will not be part of the probate process. So, as part of these beneficiaries, you can appoint one or as many beneficiaries as you want in the percentage that you decide. The law authorized to us that you can appoint as beneficiary a charity, for instance. It is not very common, let's say, that it happened, and it might represent some challenge with your bank, because normally they want that you appoint a physical person, but legally and depending of the bank, it is completely and it is legal that you appoint a charity as your beneficiary. So in that regard, I will just suggest, if that is your idea, that you check which is the bank that will offer or will make it easier for you. And also for that purpose, and in regard to your wills, for instance, if you decide to include a charity as heir, or in this case in your bank account as beneficiary, my recommendation will be that you, let's say, approach, in this case, for instance, Biblioteca Pública or any other charity that you decide, so they can provide to you with their full legal name. Because, for instance, Biblioteca Pública, we know Biblioteca Pública just like that, but their full and legal name will be Biblioteca Pública de San Miguel de Allende, AC. So that will be my recommendation for you. Even if it is possible, I would suggest that you request for that charity the tax ID number. That way you are going to make sure that the person or the charity that you appoint as beneficiary in your bank account or in your will is the one that you really want that receive those funds, that property, those assets.
And Joe, is that the same in the U.S.? Can we make a designation of death for bank accounts to a charitable organization as opposed to an individual?
Yes, you can. It's the same in the U.S. You can put charities and anything the same. It's almost identical to Mexico. You know, it's not really that much different. You can assign anyone to your bank account. You know, and some of the issues we have sometimes, and Enrique was saying, like the name has to be exact. You come across an issue, someone dies, and in the documents the names don't match, and they'll freeze up all the money.
Uncle Joe's not good enough?
No, exactly. And so they will freeze I've had a client recently, and the same thing. Within 3 months of her husband dying, they froze all her accounts because the name did not match in the will. So that it is common. It's the same as Mexico. You want to definitely have a designation on your checking accounts or your cash so your family can continue to function at your death. That makes sense.
So
I would like to mention something just in this regard, which is very important. For instance, if you appoint a charity as one of your beneficiaries in the bank account, what they will need to do once that you pass away is to bring to the bank your death certificate and prove, that they are that charity that you appoint as beneficiary, and then almost immediately will transfer the money to the charity account, which is really good because they will dispose of your funds or that money in an easiest way.
So what Joe's pointing out is really important about both in Mexico and the U.S. in terms of language. If you're going to be thoughtful enough to appoint a charity in either your, your U.S. or your Mexican will, please ask the charity for their legal name. The Biblioteca Pública has one name here in Mexico, and our 501c3 is a similar name, but it's not the same name. So please be thoughtful enough to clarify that so that the charities are not hung up, as Joe pointed out, because of the letter of the law has to be followed. So just to take that extra step.
It is very, very important. The names have to match. You have one letter wrong. If an A's in your name and they put an E, it has to be matched, like to like.
Great. That's very helpful. Okay, we're here at the end now. I mean, here's a question for you, again, with regard to legacy giving to charitable organizations. Do you guys ever advise your clients to prepare something I've read about called a legacy letter that, well, I tell people what a legacy letter is, if you know, and have you seen it? And do you recommend it?
I have not seen it that often, but a legacy letter is essentially, if you're looking at more or less for your family and creating something, and I feel like it maybe differentiates with the level. A legacy letter is really laying out your wishes to where the funds or the charities or the cause that you would like to support. We were talking about this the other day because sometimes there becomes an issue with a grandparent who believed strongly in something, a certain charity. They had donated to it for a long time. They asked that upon their death, certain money be set aside for that. That was kind of a long-standing legacy. The grandchild comes along, they've inherited some of the money. They don't like that charity. Maybe it goes against their political beliefs or their religious beliefs, or they just think it's phased out. So personally, I will say I have not seen it a lot in clients that I've dealt with. I'm not sure if Joe has, but I'm seeing more and more about it. And I feel as though some things have changed. I do feel that we see that, and I've seen studies about like the millennials and the different age groups that are coming up. Younger generations are being more active in terms of their causes, and they're being more passionate about those. So I do feel that it is definitely something that we will be seeing more as we go along, just because I think it's kind of a generation shift a little bit. And because I feel like you see so much more today in political causes or different, things that people are passionate about. I don't know if you've seen it in your.
We do legacy letters because it's like a backup. When people see the will, it's just like it's the attorney talking. But if they have a legacy letter, it's like the person speaking, to them. The will, it's just like, Well, that's what the attorney advised to do. You know, the legacy letter is like a backup. It backs up. This is what I really want to happen.
Jennifer, I think we skipped over one important question.
Yes. So I just want to pose this. I'm going to pose it to actually all three of you guys here. Enrique, not you specifically, but we're coming to the end of the year. We're coming to the end of this presentation, but the big, beautiful bill is going to be going into effect. Are there any charitable issues that we should be thinking about in 25 versus 26 in terms of our donations?
Sure. Yeah, sure. Yeah, so there's a couple of things. How do they phrase it? Let me look at my notes. So basically, there's a new deduction limit on charitable giving, right? So if you're in the highest tax bracket, that's the 37% tax bracket, then your charitable giving is going to be capped at the 35% bracket, basically. So if you have a deduction of $3,700, it's going to be limited to $3,500 if you're in that highest tax bracket. And that highest tax bracket is, income AGI something like $600,000. So it's up there, but if you are there, you might want to, make your donations in 2025. I'm sorry. You might want to make your donations in 2025 to get the full 37% tax benefit.
So just to rephrase what I'm hearing you say, in 25, if I'm so fortunate to be in a high tax bracket, if I don't have a limit on what I can donate, but in 26 I will have a limit on what I can donate and deduct. Is that what you're saying?
You're going to have a floor and a limit. So you're also going to have, essentially, if your adjusted gross income is $1 million, you're going to have a floor of 0.5%, of 0.5%. So the first $5,000 that you donate is essentially what we would call in Louisiana lagniappe. Like that is, you cannot claim that. You can only claim from $5,001 up. So if you give $5,001, it's a $1 donation, not a $5,001 donation. The first $5,000 you're just giving away. And then I'll let you speak to the cap.
Well, yeah, I mean,
That's
yeah,
essentially.
that's it. So, and that's for both, those are both in effect in 2026. So in 2025, you're still bound by the 60% of AGI limits that are complicated, and we don't really need to go into them.
No.
But there are new limits and floors coming in 2026. So if you are, the other thing that's coming in 2026 is what's it called? Basically, it's a deduction for non-itemizers,
Yeah.
right? If you're not itemizing your deductions, you can deduct up to $1,000 in charitable donations, just kind of as a above-the-line deduction,
Yeah.
we'll say.
So would all those GoFundMes that I donate to be able to fit into that?
No, it doesn't. It still would have to be to a 501c3, not gifts to your friends. But that's a nice benefit,
It encourages it for the lower income, someone who's not in that 600,000. So if you are someone on Social Security and you're not an itemizer, then it kind of incentivizes, I guess, those people who maybe think I don't have a lot of money to give.
Yeah.
Actually, now you can claim up to 1,000.
Yeah, so all those, my clients who have made a couple $100 in donations, now I can say, here's your, here it is on your return. I did want to say one other thing about the qualified charitable donations that didn't come up before. So Christy talked about how you can have part of your RMD or just part of your IRA distribution go directly to a charity, and that's not income to you. Well, the other benefit to that is it's deductible whether or not you itemize. So at the top, I had talked about, well, you know, if your charitable donations and your other itemized deductions like medical expenses, et cetera, don't exceed your standard deduction, then, you know, you might not get a tax benefit for those charitable deductions. Well, the nice thing about the QCD is that even if it's $500 or $500, did I just say 500? $5,000, you know, below that standard deduction amount, as a QCD, it's deductible whether or not you itemize. And if you do itemize, it's in addition to your itemized. So, but that's another great tax benefit of a QCD.
That's a good tip. Okay, we are going to open it up the floor to questions, but before I do that, can I ask if there's anything, any other tips that we left off in our list of questions that come to mind that you want to add? Anyone? All right, I will come up. Let's open up the floor to Q&As.
So I have a donor advised fund in the U.S. I had it for years. I populate it with appreciated stock. I've been in contact with them since they know I've moved to Mexico. It's with the Community Foundation of Tampa Bay. I understand there's a community foundation here in San Miguel. They don't operate in the same way. It appears the Community Foundation here does not entertain donor advised funds, that they make distributions to the charities that they deem that make application for funds. So I've had my community foundation chat with this community foundation, and we're trying to figure out a way in which we can make a lateral transfer of funds here, but with a specified recipient, a qualified 501c3, because my foundation said that it does come into some IRS complications if they try to give directly to a qualified 501c3 here in Mexico, that there's some I'm just trying to verify this.
A couple of things on that, if I can add just from some experience I've had here. You're right, the San Miguel Community Foundation operates a little bit differently than the community foundations that we're accustomed to in the U.S. What they typically distribute their funds to charities that are not 501c3s. And so, for instance, like the Biblioteca, we wouldn't typically be on the San Miguel Community's donation list because they figure we're already set up to get the tax returns. Now, but what will happen, if somebody sends them money and specifically says, we want this to go to the Biblioteca, they are wonderful people and they honor it and they send us the money. So there's that. I don't know about the question of, because we've received at the library donations from community foundations that are part of DAFs in the U.S., and they've been able to, because the 501c3 is a registered U.S. charity, they've been able to make those transfers.
So if it is a 501c3 registered as...
We're registered in the U.S., yeah.
Okay, all right. Because I do understand that if I do a transfer to the community foundation here, they take 5% out of whatever I'm gonna. Right. Okay.
Yep. So,
Okay.
yeah, it's a little bit of a funky thing. We can talk about it, but I can talk about it from practical experience. I can't talk about it from professional knowledge.
But yes, indeed, when the Biblioteca received generous donation through the Community Foundation, indeed, they do keep a little part of it. And when the donation is made directly to the Biblioteca, because we are already a 501c3, then we don't have that little cut on it. Anyone else has a question?
But I will say that's one of those things to always check 501 to make sure that a 501c3 is that they have the status and qualified. I did that before on my tax returns years ago where I was donating to a church and I just assumed that they were all fully registered, T's crossed, I's dotted in 501c3, and they weren't. Now, nobody ever said anything about it, but it is good to check.
So first of all, Jennifer and Deborah, thank you for putting this together. This is incredibly helpful. And panelists, thank you for taking the time to be with us and to be willing to be recorded for future reference. Is there a limit to the number of questions I can ask? I only have 4. Okay, here goes. I know, I don't like it, but yeah. So you were talking about these donor advised funds. If you put your money into a donor advised fund and you already take the credit for it, can you then award some of that money to a organization that is not a 501c3?
No, not that I'm. It has to be 501c3. That is, and I would say that's the big thing.
And who monitors that? Who regulates that? The DAF?
Well,
for the grants.
for the way my DAF operates is that I have to make a recommend that the DAF make a grant to a particular organization, and then it takes a couple of days or whatever for them to approve it. And they've got a database on the website of approved 501c3s, and I can search through that and find the group that I want to give to and select it. And if they're not there, I've got to provide all the information, and then they'll research it. And in the only one case in my experience that the group that we wanted to give to wasn't in their database. It was a registered 501c3, but it just took a little bit more time for the recommendation to be approved. But I would think that
In my experience, it's
Gotta be
been
a
the same, but I
501c3.
mean, I've been, like I said, with Schwab, so, I don't know how it would be if you went on to, I don't know if there's independent sites, how they operate, but if you're going to a custodian like Charles Schwab or Pershing or what have you, Raymond, one of the broker dealers that offers that are custodians, they do have a database.
Well, I was just curious because there are some NGOs in Mexico, right, that are not 501c3s, and that's why they go through the community foundation. So I was curious if that could then be channeled that way.
Yeah, you think of it in terms you're paying, we're talking about U.S. taxes and getting benefits on U.S. taxes, and so they're focused on charities that are properly registered as charities in the U.S. So.
yeah, I'd be surprised if a DAF operating out of the U.S. would make or allow a grant to a Mexican
Like an AC.
AC. Yeah.
Okay, just thought I'd ask. Okay,
But,
and
sorry, Joanne. Again, to the letter of the law, as I specified with wills, it's really important for you to take the time to ask charity their name. Because the Biblioteca, for example, in the IRS database, if you put in Biblioteca Publica, you're not going to find us. We're listed so EIN numbers, as Paul mentioned at the very beginning, every 501c3 has an EIN number. And I personally am updating my wills so that they include the legal name of the entity and the EIN number, so that in the future, whoever's dealing with this there's no barrier for that to be a donation to be made.
well, and even for the Mexican bank accounts, because there's another Biblioteca Publica around the corner.
Yes.
Right. Okay, a second question. This is from Mabel, who just donated the house to a local charity. What does the organization have to have in place in order to be able to handle that? I mean, are we imposing something uh, extraordinary on the organization? I mean, it's benefiting us because we're unloading ourselves of the house, but then what about on the receiving end? What do they have to have in place in order to handle a donation like
On the
that?
receiving end, we've had this happen at the library since I've been here. And a house was left to both the library and another charitable organization here in town. So first of all, you have to get along with the other charitable organization, and you guys need to agree, okay, we're going to put it on the market and sell it and split the cash. Okay, who's going to be the real estate agent? We're going to have to agree amongst ourselves what's the price that we ask for. It's not easy, but it's certainly done. We did it. But it takes a while, and then okay, so we get an offer. Do we agree that we accept this offer? You know, one may say yes, one may say no. And in this particular instance, it was a 50-50 donation, so there wasn't one charity that had the ultimate say-so. So it takes a while to work through the process, but you can get there.
And finally, for the RMDs on the, can you as an individual receive the money from your required minimum distribution and then turn around and give it to, or does it have to go directly from?
It has to go directly. If you take it, then you're going to have to pay the taxes on it. So it's more beneficial if you designate it to go directly, then you don't have to pay the taxes.
Okay.
If it touches you first, then
Right.
it's your income.
If your distribution, for example, is $20,000, your RMD is $20,000 and you get it, and then you give $5,000 to the biblioteca, you recognize $20,000 of income on your tax return and potentially get that $5,000 deduction if you itemize. If, on the other hand, you direct, your custodian of the IRA to send $5,000 as a qualified charitable distribution to the biblioteca, and you get the other 15, now you have $15,000 of income. They've got $5,000, and you also have a $5,000 deduction, regardless of whether you itemize or not.
And a standard deduction, if you're not going to itemize, varies, or is it a fixed amount?
I mean, it's adjusted for inflation each year. It depends on a couple of different factors, age, whether you're blind, but for the most part, it's, pretty standard. Yeah, it's like 31,600, I think, in 2025.
That's a standard amount? Wow.
Oh, that's for married filing joint, yeah.
Oh, yeah,
If you're single, it's 15,
That's
I
a
think.
standard deduction.
That's
So
the standard
if you're going to
deduction.
itemize, you have to have donated more than that.
There's different itemized deductions that you can aggregate: medical deductions, certain state and local taxes, charitable deductions. Those are the three big ones. Then there's some other ones as well, but those are the three big ones.
But what I'm hearing here, which is really new information for me, and I just want to make sure I'm clear on this, the qualified donation is over and above or independent of whether you itemize or don't itemize.
Yeah.
You would get that, you give that donation, qualified donation, whether you itemize or not, I would get to write off that donation.
Yeah, basically, you're not taking that amount into income. You're not including it in income.
Great. Any other questions? One more down
I think Federico has questions down here.
Gracias. Sorry. This is a question is for Enrique. We've been talking about donations related to 501c3s in the States. I want to ask you about what you see as the trends for giving from Mexican citizens, people who live in Mexico. Traditionally, not necessarily something people think about, but in your position, have you seen that increase? What are there any, indications that younger people are getting more involved in thinking about their gifting?
Okay, thank you. So the question is in regard to Mexican people donating, right?
Yes.
I might not be the best person to respond this because most of my clients are foreign people, but particularly I can tell you that between the people, the Mexican people that I know, especially those that are professional, they are more inclined to donate to associations now than in the past. But I'm talking probably more about people around 40, 50 years old than younger people. I think that's the response.
Thank you.
Okay, we're right at our limit now, so we're gonna break, but I would like to just personally thank all of our panelists here for participating today. Thank you very much for your time, your generosity, your information. As Deborah said in their introductions, if you would like more one-on-one time with these guys, they'll hang out. They all have their business cards with them, so if you're looking for a tax preparer, Paul is local here. Enrique is local here in San Miguel to help with any contract work you need legally. And Christy and Joe have come from Louisiana, but they're U.S. financial planners. So feel free to ask any of these guys for their contact information so that you could follow up with them in more detail. Thank you guys again for being here today and for participating.
Thank you.